Welcome to Ras Al Khaimah.
Ras Al Khaimah, along with other Northern Emirates like Al Quwain and Sharjah, are trying to catch up with wealthier neighbors Dubai and Abu Dhabi. And now, the UAE's first ever casino, the Wynn, is supposed to make this happen. But will investors here strike it rich? Or are we watching another property bubble forming? Let's find out. Part 1. Projects in the Northern Emirates. The Northern Emirates, including Fujairah, Ras Al Khaimah, Al Quwain, Ajman and Sharjah, have historically lagged behind the economies of Dubai and Abu Dhabi. Around 80 kilometers or 50 miles north of Dubai by car, in a cluster around 30 kilometers or 19 miles in length, a number of hotel and real estate projects attempt to catch up with Dubai and Abu Dhabi. Sharjah Waterfront City was already launched in 2005, but never took off, with only a few apartment buildings and villas completed so far. Prices are low compared to Dubai, despite the waterfront location. In 2023, a new revised master plan was published. However, since then, little has happened, almost 20 years after the original launch. Further up north, the largest development in progress by far is downtown Al Quwain, a master-planned beachfront development by the Indian property developer Chopra Properties. Launched just this year, downtown Al Quwain is supposed to transform the area, similar to how Ema Properties did with downtown Dubai. The long-term plan envisions housing for 150,000 people, with the first buildings to be completed in 2028 or 2029. Also located in Al Quwain is Siniyah Island, similarly developed by Chopra Properties. Positioned higher in terms of pricing and launched in 2024, the master plan envisions 25,000 residents and 8,000 residential units. The two developments in Al Quwain by Chopra are in fact the first major off-plan developments in the Emirate, and while they are priced lower than similar developments in Dubai, they are significantly costlier than anything else currently available in Al Quwain. For that reason, we get news articles like this one, on how property prices in Al Quwain are now among the highest in all of the Emirates, with a recent 50% price increase. The figure on the 50% price increase is of course misleading. The mix-up of properties on sale today is completely different than 1 or 2 years ago. Further north, in Ras Al Khaimah, we have 3 developments open to freehold property ownership. The first one is Mina Al Arab, a master-planned community by the local developer RAK Properties. Mina Al Arab was launched around 10 years ago and is partially completed, featuring hotels, apartments and townhouses. However, the area has similarly suffered from delays, with some of the properties like the Anantara Hotel over there being delayed by close to 5 years. Al Hamra is more than 15 years old and features a golf course as well as one of Ras Al Khaimah's largest shopping malls, the Al Hamra Mall. A majority of the properties here was completed in the early 2010s. And the largest of the 3 freehold neighborhoods in Ras Al Khaimah is Al Marjan Island. Shown here, the original master plan from the mid-2000s, still without plans for a casino. In 2022 it was announced that the UAE's first casino, the Wynn, will be built here, with a scheduled opening in 2027. Thanks to the casino announcement, a large number of independent hotel and apartment projects are now underway. Amidst the hype by real estate agents and developers, it is easy to overlook the fact that Al Marjan Island is a product of the property boom and bust in the early 2000s. The island already started reclamation works in 2004, more than 20 years ago. Due to the 2008 property crash across the UAE and lack of demand in the 2010s, only a small handful of projects were ever completed here until recently. The oldest of these are the Rixos Hotel and Residences and a Pullman Hotel. Since then, only a small number of budget and mid-range hotels was opened here, including a DoubleTree and Hampton by Hilton. The slow development of Al Marjan Island over the last 20 years made it obvious that the Northern Emirates needed a bigger driver for future growth. And that driver is the Wynn Casino. This brings us to part 2, the introduction of gambling to Ras Al Khaimah and the UAE. As of today, Ras Al Khaimah's economy is tiny compared to Dubai's. Its population is around 400,000 versus Dubai's 4 million people. Ras Al Khaimah's economy primarily relies on manufacturing, which makes up 30% of GDP, as well as some trading and the public sector. Ras Al Khaimah already welcomes around 1.3 million tourists a year, compared to Dubai's 19 million. Ras Al Khaimah's airport currently serves around 600,000 passengers a year to and from around a dozen destinations, whereas Dubai's airport is the second busiest in the world with its 90 million passengers a year. GDP per capita in Ras Al Khaimah is just $30,000 per person per year, compared to around $50,000 in Dubai. The fact that Ras Al Khaimah will have the UAE's first casino isn't a coincidence. The UAE's federal government is concerned about the economic differences between wealthier Abu Dhabi and Dubai versus the north, and thus strategically allowed Ras Al Khaimah to operate the country's first casino. Yes, gambling is officially legal in all of the country, but you still need a valid business license to operate. So far, only the Wynn in Ras Al Khaimah has been granted a business license to operate a physical casino. Dubai, on the other hand, has had its own aspirations to bring Las Vegas-style casino resorts to the city for almost 20 years now. A project called Dubai Pearl was announced in 2002 to be located right at the entrance of Palm Jumeirah. It was supposed to house luxury hotels, including a Bellagio and MGM property, the same brands as the ones found in Las Vegas. There was never an official announcement confirming that these properties would contain gambling facilities. However, it was implied that gambling would follow. Dubai Pearl started construction in 2006, but fell victim to the 2008 financial crisis. The site never restarted construction and was fully demolished last year. Another Las Vegas casino brand, Caesars Palace, operated a hotel on Blue Waters Island in Dubai between 2018 and 2023. The main reason Caesars Palace entered the market was the prospect to open gambling facilities, which also never materialized. And as a result, a different operator took over the hotel. And currently under construction in Dubai is a new, different MGM at Bellagio property, in cooperation with government-owned developer Wasl Group, right north of Burj Al Arab. Here, MGM is hoping for a casino license to be granted, with a large basement already being built to house a potential future casino. Even though construction is already underway, Dubai has still not granted MGM a gambling license. And it's not just Dubai. MGM also applied for a gambling license in Abu Dhabi, which also is still subject to approval. And this brings us to part 3. Safe investment or next crash? Now, back in Ras Al Khaimah, there is a government office right at the entrance of Al Marjan Island. And if you enter this office, you can see a huge model of what the southern part of Ras Al Khaimah is planned to look like. And right here, the tallest tower, at a height of more than 300 meters or 980 feet, is the Wynn Casino, the same brand as the Las Vegas original. Right south of the casino is some recently reclaimed land that is rumored to also belong to Wynn. However, there's no definitive confirmation on this. If you talk to salespeople at the office, you will get a good idea of the local government's plans. The goal is to increase the population by 2030 from currently 400,000 to 650 or 700,000, which would be a dramatic 60 to 75% increase in just 5 years. To increase tourist numbers from currently 1.3 million to 3.5 million, and almost double the number of available hotel rooms from roughly 8,300 today to more than 15,000. As part of these plans, all of Al Marjan Island would be developed as a mixed-use neighborhood, with hotels and residential developments. For these goals to become a reality, Ras Al Khaimah's tourism industry would have to change drastically. Over the past 10 years, since 2015, tourist numbers have almost doubled from 750,000 to 1.3 million today. That's an average annual growth rate of 7%. To achieve 3.5 million tourists, this growth rate would have to double to 15% a year for the next 4 years. As of 2024, 50% of tourist arrivals are international tourists. And these tourists are somewhat budget-oriented, primarily coming from former Soviet Union countries such as Russia and Kazakhstan. Average daily room rates are significantly lower than in Dubai, and hotel occupancy is also slightly lower, at just 71% in 2024. Similarly, the average number of nights stands at just 3.5 per stay. So in summary, as of today, Ras Al Khaimah's tourism industry is budget-oriented and already having some overcapacity issues. Given the large number of hotels and properties under construction, the only way to prevent a collapse of the local market is if the Wynn Casino becomes a roaring success. Let's assume the best possible scenario for Ras Al Khaimah comes true. The Wynn is a huge success and attracts 3 to 5 million additional tourists to Ras Al Khaimah. This is similar to visitor numbers at casino resorts in Las Vegas, Macau and Singapore. And let us assume there won't be any competing casinos anywhere else in the UAE. The already under construction MGM in Dubai never opens its casino floor for whatever reason. Even in that best case scenario for Ras Al Khaimah, there are a number of red flags today. Red flag number 1, high off-plan prices. There are already 2 completed apartment complexes on Al Marjan Island today. The Pacific Residences and the Bab Al Bar Residences, which are part of the aforementioned Rixos hotel complex. Even though these apartments are already completed and located right on the beach, one-bedroom apartments in both these complexes sell for just around 1 million dirham today. That's around 50% less than off-plan apartments being built right next door, which will take many more years to complete. If new off-plan launches are double the price of already completed units next door, you are at high risk of a bubble. It shows that speculative demand is high, but actual end-user demand to live in those units remains low. There also appears to be limited demand by investors to buy and hold units for the long term. Otherwise, why sell a beachfront property for 1 million dirham when everything that's under construction is double the price? And if the new casino opening really leads to the influx of tourists as projected, the return potential for these already completed units should be much higher. They are 50% cheaper and can be rented out immediately. By the way, the fact that off-plan properties are so much pricier than already completed units is nothing new. It is the same in Dubai. We made an entire video on this. The next red flag is the lack of local market data. Ras Al Khaimah's land department does not publish transaction prices or disclose how many apartments are under construction in which building. In Dubai, this data is widely available, but not in Ras Al Khaimah. You can check historic pricing trends on private property platforms such as Beirut. However, these only show listing prices, not transaction prices, and only for the previous 12 months. Not being able to verify actual transaction prices means that developers and real estate agents can claim whatever they want. Someone can claim that they sold an apartment for 10,000 dirham per square foot in Ras Al Khaimah, but there's no way to check whether that's actually true. The third red flag is the proliferation of ultra-luxury apartments now under construction. There's a flood of luxury off-plan properties that are being listed at prices around 4,000 dirham per square foot. That's more than $1,000 per square foot, or almost $12,000 per square meter. Those are prices you pay in central locations of world-leading cities such as Sydney, Tokyo and San Francisco. It is difficult to see how a hotel apartment in Ras Al Khaimah can sustainably cost as much as an apartment in Tokyo or San Francisco. On the other hand, standard non-luxury off-plan properties in Ras Al Khaimah still sell for around 2,000 dirham per square foot, which is similar to properties in Dubai Marina and Creek Harbour. You have to ask yourself, where's the upside? And then you have news reports that claim that there's a chance of property prices close to the casino to go up to 10,000 dirham per square foot. That would mean the same prices as in Hong Kong or the Royal Atlantis Resort in Dubai. Who would pay such prices just to be located next to a single casino 100 kilometers outside of Dubai? Ras Al Khaimah isn't as unique as you might think. First of all major feeder markets for the UAE, that is Russia, the UK, the European Union, the US, China and India, have casinos of their own to varying extents. It is questionable whether UK tourists would all of a sudden want to visit Ras Al Khaimah for its single casino, when for the same or less money they can just fly to Las Vegas or gamble at UK casinos. In Sharm el Sheikh in Egypt on the Red Sea, there are multiple casinos already, large resorts, and arguably more attractive beaches. Even in terms of flight connections, Sharm el Sheikh is further ahead, with multiple times the number of flight connections than Ras Al Khaimah. All of these red flags are not to say that Ras Al Khaimah's new casino will fail. To the contrary, it is very likely to succeed. However, it is difficult to see how buying an off-plan property in Ras Al Khaimah at 2,000 or 3,000 dirham per square foot can result in higher returns than in Dubai or other markets. Even in Dubai, over the last 10 years, around 50% of property investors lost money when reselling their unit. And this can easily happen in Ras Al Khaimah as well. To outperform the market and make a good profit, it's all about the right time and the right property. Rather than relying on real estate agents or biased developers, we here at the Dubai Navigator made it our mission to independently analyze whether a property is likely to outperform or underperform the market. We can help you avoid costly mistakes by providing you with data-based return forecasts on any UAE property. Visit thedubainavigator.com for our 100% independent real estate analysis, plus our extensive range of relocation services, from tax optimization strategies to company setups and visa applications. Learning from Macau and Las Vegas. In the United States, Las Vegas, with its more than 40 million tourists a year, has historically underperformed many parts of the country. House prices here are also much more volatile than in New York or Los Angeles, which are economically more diversified. And similar to the UAE, new home prices are drastically higher than resale prices, which isn't particularly good if you want to buy a new house today and resell it 5 or 10 years later. The large supply of newly built homes means that people have little reason to buy older existing units. In a way, Las Vegas and Ras Al Khaimah have some similarities. Both of them are tourism-dependent markets with a large share of domestic visitors. Both have virtually unlimited land, and the tourism or casino industries aren't known for paying particularly high salaries, meaning there's a limit to the level of rent locals can afford. Macau is a bit of an interesting story. The former Portuguese territory became a special administrative region of Greater China in 1999. While gambling here has been legal for more than 175 years, since 1849, the economy only took off in 2002 when Macau's government issued gambling licenses to foreign companies such as Wynn, Las Vegas Sands, and MGM for the first time. It also helped that neighboring China grew in wealth during this time. Since then, GDP grew by 900%, and house prices increased by 700%. Truly life-changing returns. And people investing in Ras Al Khaimah today, of course, are hoping to replicate at least some of those returns. However, here's why Ras Al Khaimah will likely struggle to come anywhere near those numbers. First of all, Macau is connected by land bridge to mainland China, and specifically the Pearl River Delta with a population of 75 million people. There's also a 55-kilometer sea bridge to Hong Kong. More than 90% of Macau's tourist arrivals come from mainland China and Hong Kong. And despite tourist arrivals of around 30 million a year, Macau's airport counts just 7.6 million passengers. As every passenger is counted twice when arriving and leaving, this means that just around 3.8 million people, or 10% of tourists, arrive by plane. And this shouldn't be a surprise, since other countries in the region, including Thailand, Malaysia, Singapore, Vietnam, and the Philippines, all have their own casinos. In comparison, in the UAE, the domestic market is just 10 million people, and 6 million of those are Muslim, with a religious aversion to gambling. While there are lots of high net worth individuals in nearby Dubai, local gambling demand will be much more limited than in other countries. In terms of real estate, yes, Macau has seen amazing 700% growth in property prices over the past 25 years. However, most of those returns were made in the early days. Over the last 10 years, prices were flat or even declined. In Macau, there's very limited land available, with most land you see today being reclaimed. In Ras Al Khaimah, like everywhere else in the UAE, there's almost unlimited land, which makes it more similar to Las Vegas. Despite the 700% increase in prices, average property prices in Macau today are only around 3,600 dirham per square foot, which isn't that much off from what developers are charging for off-plan properties in Ras Al Khaimah today. The returns seen in Macau are not so much a result of the casinos, but much more of the economic rise of China. Across China, property prices increased by 700% on average. So Macau's performance in the housing market is just average. In fact, in nearby Shenzhen, property prices increased by 1,600% in US dollar terms between 2002 and today, much more than in Macau. This shows that even a Macau-style boom is unlikely to lead to better than average property returns. Ras Al Khaimah has the early mover advantage going forward. However, outperforming other markets will be challenging. If you invest in a property with a reasonable square foot price, we do believe it is possible to outperform Dubai and other real estate markets. However, the emphasis lies on the property you select. Many off-plan properties are priced at levels that leave little to no profit on the table for you as a buyer. A better strategy than buying directly from a developer will be to find already completed units on the secondary market. For more personalized real estate analysis, tax minimization strategies for businesses and individuals alike, and all-inclusive relocation assistance to the UAE covering visas, company setups and more, visit us today at thedubainavigator.com.